Hi everyone, it's Benny the Finance Dog here. Welcome to my channel. Today is Sunday, May 21st, and I'm here to talk about what to expect from the financial markets this week. Before we begin, I wanted to briefly highlight why it is important to prepare for the week ahead of Monday's open. Studying the market and tickers you plan to trade can help to establish a baseline in terms of expectations. Though technical analysis is key to day trading, being cognizant of the global events that can impact markets will help you analyze your potential trades and effectively exercise caution. Furthermore, history never repeats, but it often rhymes is a great quote when talking about the historical movements of any particular stock. Knowing how a stock did in the past doesn't necessarily guarantee results, but can also help guide expectations for the week. Now, let's talk about the macro events of the week. Government debt ceiling. One of the biggest things to watch this week is the government debt ceiling. The government is currently about $20 trillion in debt, and the debt ceiling is set to be reached on July 31st. If Congress doesn't raise the debt ceiling, the government will be unable to borrow any more money, and it could lead to a government shutdown. The market has already priced in that the debt ceiling will be raised, and any news of a delay could lead to a downturn in the markets. Second, FOMC minutes released on May 24th. The FOMC minutes for the May 3rd and 4th meeting will be released on Wednesday, May 24th. The minutes provide insight into the FOMC's thinking on monetary policy, and they can be a major driver of market volatility. The market will be closely watching the minutes for any clues about the FOMC's plans for future monetary policy. If the minutes suggest that the FOMC is planning to raise interest rates more aggressively, it could send stocks lower. However, if the minutes suggest that the FOMC is planning to be more cautious, it could send stocks higher. Lastly, Microsoft will be holding a 3-day conference where it will be showcasing the latest developments and plans for its tech enterprise starting on May 23rd. The announcements and highlights of the conference are likely to send share prices up or down. 3 things that could act as a launching port for share prices are the guidance, announcements, and overall market sentiment. If Microsoft's leadership team provides positive guidance, it could lead to an increase in demand for tech shares. Conversely, if Microsoft's leadership team provides negative guidance, it could lead to a decrease in demand for those same shares. If Microsoft announces a new product or service, it could lead to an increase in demand, while a negative development, such as a delay in a product launch, it could lead to a sell-off of shares. Now let's talk about the charts for SPY and Apple. Here is the daily candle chart for SPY leading into this week. Historically, SPY has been up the 13 out of the last 23 years this week, leading up to the Memorial Day holiday. Last year was a bit of an outlier, with SPY gaining nearly 6% in a single week. Last week was very bullish, and we may see a further pullback. Overall, I have a downside bias heading into next week. Let's move on to Apple. Here's the daily candle chart for Apple leading into this week. Since 2000, Apple has been up the 14 out of the last 23 years this week, leading up to the Memorial Day holiday. Last year was a bit of an outlier, with it gaining nearly 9% in a single week. Last week was very bullish, and we may see a further pullback. Much like SPY, I have a downside bias heading into this week. So, in conclusion, with the government debt ceiling looming and the market being more volatile, it's important to be prepared for anything this week. The financial markets are always unpredictable, but by being prepared, you can reduce your risk and increase your chances of success. Thanks for watching, and I'll see you next week.